The income tax regulations in India comprise of the Income Tax Act 1961, the Income Tax Rules 1962, notifications and circulars issued by Central Board of Direct Taxes, Annual Finance Acts, and judicial pronouncements by Supreme Court and High Courts. As the income tax rates and regulations change with every Annual Finance Act, this episode will focus on giving you an overview on how the law is structured. Under the Income Tax Act, income is classified under the following heads of income. First, salaries. An income can be taxed under head salaries if there is a relationship of an employer and an employee between the payer and the payee. Second, house property. Income from any property, residential or commercial, is taxed under this head, for example, rent. There is also a provision to account for maintenance of the property. Third, profits and gains of business or profession. Any income earned from any trade, commerce, manufacture or profession shall be taxed under this head of income after deducting specified expenses. Fourth, capital gains. The Income Tax Act defines a capital asset as property of any kind held by an assessee, whether or not connected with his business or profession. Some examples would be house property, jewelry, and cars. Any profits or gains from the transfer of a capital asset shall be taxable under this head. The tax rates for capital gains are defined separately from other heads of income. Income under this head has the advantage of being adjusted for inflation. There is also a provision to offset losses. Fifth, other sources. Any income which is not taxable under the above mentioned four heads shall be taxed under this head. Example, interest from bank deposits, gifts from non-relatives, and gambling. Chapter 6A is a provision of the Income Tax Act which is used to promote investment, savings, and give relief to certain citizens such as those who suffer from terminal diseases or are handicapped. The most popular of these provisions is Section 80C, which provides deductions for investments. How are taxes paid? All taxes must be paid in advance, and the government provides fixed dates by which certain percentage of taxes must be paid during the financial year. Taxes can be deducted at source for various types of income, most commonly salaries. In this case, taxes are first deducted and then the income is paid out. Failure to pay taxes or a delay will be penalized with a fine. What is a tax return? Income tax return is a form on which a taxpayer makes an annual statement of income. It is used by the tax authorities to assess your tax liability. In the case that excess taxes were paid, then they are refunded with interest. You can easily file your tax returns on the Income Tax Department's website. The Income Tax Department also has a YouTube channel with detailed instructions on how to file your tax returns. If you find filing your returns difficult or complicated, you could avail the services of a chartered accountant. Do you need to be afraid of the Income Tax Department? Unless you have intentionally hidden your income in order to avoid taxes, you do not need to be afraid of the Income Tax Department. In the case you fail to disclose income or pay taxes for any genuine reason, including the fact that you forgot, you will have to pay the taxes due with a penalty. If you disagree with the assessment of the assessing officer, you can always file an appeal through any chartered accountant. You may seek the services of a chartered accountant in the case you have any difficulty with your taxes. Evading tax is extremely unwise as the government's stand on black money is strong and you could easily be caught by the current system. For more information on income tax, please read In the Wonderland of Investment by A.N. Shanbag and Sandeep Shanbag. Random Walk Ed is created by Random Walk Investment and Financial Services. You could contact us if you need assistance with your finances or are looking to make investments. Please contact us by email in case of queries. Please consider supporting Random Walk Ed on Patreon. Your contributions will help us improve our content and continue making it available for free. Subscribe to our channel to receive updates on our latest videos. Share this video with anyone who might find it useful.